You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
It really is striking how fast things can change in tech. You look at these giants, seemingly untouchable.
Right. Titans of the industry.
And then boom, they're facing, well, some pretty serious headwinds.
It's just the way innovation works, isn't it?
Yeah.
Constant change. Even the biggest players, they have to constantly adapt, protect their core.
Which brings us right to today's topic. We're going to dive into this significant drop in Alphabet's stock value. That's Google's parent, of course.
And the sort of underlying worries about its main engine, the search business.
Exactly. Many of you probably saw the headlines flying around.
Yeah, so our goal here is really to cut through that noise, give you a clear picture of what's driving this, and, well, why it actually matters. We'll try to keep it straightforward.
Think of this as your quick path to getting up to speed. So, the mission for this deep dive. Let's unpack Alphabet losing that $138 million in market value.
Figure out the factors, especially around search and what it might all mean going forward.
And we're drawing on recent news reports for this, trying to get the latest understanding. Okay, so what kicked this all off? What was the immediate trigger?
Well, it seems the immediate spark came from some court testimony. An Apple executive, Eddie Q.
Ah, right. Senior VP of Services at Apple.
Exactly. He mentioned that Apple is actively looking at integrating AI features directly into Safari.
Okay, on the surface, maybe that doesn't sound world-shattering, but the context here is key, isn't it?
Absolutely. Because Google pays Apple, what is it, an estimated $20 billion a year?
$20 billion, just to be the default search engine on Safari? That's a huge number.
It's a massive strategic payment. It guarantees Google Prime position with billions of users. So if Apple even hints at changing that...
Investors get nervous. Very nervous.
Precisely. Losing that default spot isn't just about the money, it's about access. It forces Google to potentially spend even more to reach those same users. So yeah, the mere idea causes ripples.
And there was something else in Q's testimony too, right? Something perhaps even more concerning.
Yes. He also said that last month, for the first time apparently, the actual number of searches coming from Safari went down.
Declined. Wow.
Now look, 1 month isn't necessarily a long-term trend,
but it definitely makes you wonder, could these other AI services like OpenAI or Anthropic, could they already be pulling queries away from Google?
That's the question, isn't it? People getting answers directly from AI, maybe not even needing a traditional search for something.
So if Apple puts AI in Safari, does that mean users might just get their answer right there? No need to click through to Google?
That's the potential threat.
Yeah.
A summarized answer, the specific info, without ever hitting that Google search bar inside Safari.
Now, Alphabet did respond, didn't they? They put out a blog post.
They did, saying search queries are still growing overall, including from Apple users. But the market's reaction.
Yeah, the market didn't seem entirely convinced because the reaction was pretty severe.
Oh, absolutely. Alphabet stock dropped almost 7% in just a week.
And you compare that to the NASDAQ 100, the broader tech index, which only fell slightly in that same time.
Right. And that 7% drop translates to $138 billion wiped off their market cap. Just like that.
It's a huge amount. Really underscores the sensitivity around Google's search business.
Definitely. There was a quote from Art Hogan at B. Riley Wealth Management that summed it up well. He said, "The basic issue is, will Alphabet lose its cash cow?"
That cuts right to the heart of it.
It does. It feels like maybe for the first time in a long time, Google is facing real, credible competition in search. A new era, perhaps.
Though this isn't the very first time AI fears have hit Alphabet's stock, is it?
No, that's true. Ever since ChatGPT burst onto the scene late 2022, there have been these periods where the stock dipped on worries Alphabet was, falling behind in AI.
I remember the one back in February 2023 related to their own AI chatbot having some accuracy issues.
That's a good example. But it's interesting.
They usually bounce back, right. In fact, they were doing pretty well recently after their Q1 earnings.
Exactly. Their last earnings report for the quarter ending March 31st, it actually showed search advertising was still really strong.
So the core business looked solid.
Which makes this current sell-off, the speed and the size of it, even more notable. It highlights just how nervous the market is about AI disruption.
Even for a company like Alphabet, with all its AI talent and resources.
Yeah, the market's clearly on edge. It just injects a lot of uncertainty into how you value the company going forward.
Which brings us neatly to valuation. Alphabet has often traded at a bit of a discount compared to other tech giants like Microsoft, right? Based on price to earnings.
Yes, that's generally been the case. And that gap, that discount, it's actually gotten wider over the past year.
Because of these AI worries.
It seems likely.
Yeah.
Investors are basically saying they're willing to pay less for each dollar of Alphabet's future profit compared to Microsoft, perhaps because of this perceived threat to search.
So what are the numbers looking like now?
Well, as of Wednesday's close, Alphabet was trading around 15 times its projected earnings for the next year.
Okay. And how does that compare historically?
Their 10-year average is more like 21 times earnings, so quite a bit lower.
And Microsoft?
Microsoft's trading around 30 times projected earnings, compared to its historical average of about 26.
Wow, that's a significant difference. 15 times versus 30 times.
It is. It signals less market confidence in Alphabet's future profit growth compared to Microsoft, and this potential competition in search seems to be a major factor.
It goes back to that Art Hogan point, doesn't it? If competition starts to chip away at search.
Then future profits become less certain, making those earnings projections feel, well, a bit shaky. It adds risk.
Okay, so there's market nervousness, valuation pressure. But what about actual market share? Is Google actually losing ground significantly?
Well, it's interesting. The latest data we have from Statista up to March this year still shows Alphabet with a massive share of the global search market.
How massive?
Around 89.7%. Now, that is down slightly from January 2023, just after ChatGPT launched, when it was about 92.9%.
So small dip, maybe, but still incredibly dominant, almost 90%.
Exactly. It's not like the floor has fallen out, at least based on that data.
What are the Wall Street analysts saying? The people who follow Alphabet closely. Are they panicking?
Generally, no. The sentiment is still pretty bullish, actually. Over 80% of analysts tracked by Bloomberg have buy ratings on Alphabet stock.
80%. That's still very high.
It is, although it's worth noting it's slightly lower than the percentage of buy ratings for Microsoft, Amazon, or Meta.
Subtle difference, but maybe telling. And what about their press targets? Where do they see the stock going?
That's another interesting point. Even after this recent drop, Alphabet's current share price is trading nearly 30% below the average analyst price target.
So analysts, on average, still see a lot of potential upside.
They seem to. Mark Mahaney at Evercore ISI, for example, he came out after the stock dropped and basically said, look, search volume growth might slow, but revenue growth is still holding up. He kept his buy rating.
So many analysts are looking past the immediate noise, but are there any more cautious voices emerging? Anyone getting worried?
Yes, we are starting to hear some. Ben Reitzes over at Melius, for instance. He started questioning the consensus estimates for Alphabet's net income in 2025.
Which are around $115 billion.
Roughly, yeah. Reitzes is suggesting maybe those estimates are a bit too optimistic now.
And why is that? Is it just the Apple News?
That seems to be a big part of it. He specifically mentioned Eddie Q's comments about those April search trends.
The decline in Safari searches.
Right, and Reitzes is worried that maybe paid clicks, the ads people click on in search results, might be falling faster than people realize.
Because if search volume drops or people get answers directly.
Fewer clicks on ads. And he made this observation. He said, in our experience, this stuff happens quickly.
That's a sobering thought, like the ground shifting under your feet before you fully realize it.
Exactly. Think about Blockbuster Video facing Netflix way back when. Dominant 1 minute, disrupted the next. Tech shifts can accelerate rapidly.
Okay, so let's try to pull this all together. We've got this significant market reaction triggered by Apple's potential AI moves and some worrying data points about Safari search.
Which has basically reignited all these underlying fears about AI competition hitting Google's main moneymaker, its search business. Big drop in market value follows.
And despite Alphabet saying, no, growth is still good, and most analysts still being positive.
The market is showing clear signs of anxiety. There's this real tension between Google's established dominance and the potential for these new AI tools to disrupt things very quickly.
It really just hammers home how fast the tech world can pivot. Even a behemoth like Google isn't immune.
It really isn't. And it leaves us with a pretty big question, one for you listening to think about.
Yeah.
If even Google, with its massive resources and market share, is facing this kind of pressure right now, what does that tell us about the future of how we all find information?
How search itself might change.
And how your own habits, how you look for answers, might evolve with these powerful new AI possibilities coming online. Something definitely worth keeping an eye on.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.